You think the world has become even more uncertain?
Today, the biggest threat of a top CEO, whether it's abroad or India, is the uncertainty.
The banks and the financial institutions have funded projects. They have funded the corporate sector. So why is it that today they are shying away?
I'm worried, I'm concerned. And today we need the DFI.
We all know if we bring down interest rates, more people will buy homes and more corporates will invest.
We assume that stock markets will keep going up, but it could go down. I think the new entrants have not seen a crash. We have seen crash. Pakistan war and all in the 90s.
Even in terms of your savings, diversify. Think of even long term, like insurance. Of course, you buy a home, you invest in SIPs. Make sure your loan servicing is not more than 25% of your income, and participate in equity markets.
We have grown up taking insurance, life insurance policy.
The issue also with developers is that banks are not allowed to fund acquisition of land.
Land is the biggest asset. If you can't fund land, that fallacy should go.
Affordable housing. Again, targets are quite ambitious. What do you think we need to do more?
So most developers are not doing affordable. We have to incentivize them.
If you were to pick one cricketer today for a corporate turnaround.
For a corporate
turnaround, who would that be? In this world of disruptions, transformations, fleeting headlines, and fast-changing markets, there are very few individuals whose voices consistently remain profound, wise, measured, and deeply trusted. Today, I have the pleasure of speaking with one such individual, someone who's not just witnessed the evolution of India's financial landscape, but actively helped shape it. None other than Mr. Deepak Parekh. Mr. Parekh, welcome on my show.
Thank you for inviting me.
It's such a pleasure. We've known each other for, I don't know how many decades. Decades, absolutely. And, we
were working in the same building.
Same building, Raymond House, yes. And in the financial world, in the policy world, in those delegations, forums, at work, outside work. But I think today is going to be a special pleasure to chat with you on my show.
Okay.
Before we dive into the financial world, let me share a fun fact with you. A fun fact which is common between both of us.
Okay.
That is our common love for Sudoku.
Oh, wow.
Yes. So like you, I'm also very fond of solving those puzzles, and I cannot sleep before solving one or two of those puzzles every night.
I do the same thing every night, wherever I am.
Wherever you are.
Wherever I am. And the most difficult one.
Okay, the extreme level.
one.
Extreme level, yes.
Either on the iPad or on the telephone. On the mobile.
Yeah, I think it, of course, gives you that, little bit of calmness, but at the same time, I think it's a whole exercise in logic and,
absolutely. And, patience, logic, and, people tell you that in old age you get Alzheimer's. One way to avoid Alzheimer's is to keep your mind active. If you're retired, your mind is not active. You have to use your mind. We don't use our minds adequately. The capacities in our brain is much more.
Much more,
than what we use. So I thought this is one way of hoping not to get Alzheimer's.
So it's very interesting. And in fact, when you say this, I was just reading a research a couple of days ago where they say that human brain is used to a very small percentage of its capacity. There's a huge scope for us to use our brain much more. So, Mr. Parekh, first, how do you see the state of the world today? You and I have traveled together on so many delegations, forums. We've always said that the world is a VUCA world. Volatile, uncertain, complex, ambiguous. You think the world has become even more uncertain?
Even more VUCA. And today the biggest threat of a top CEO, whether it's abroad or India, is the uncertainty.
Yes.
The uncertainty on supply chains, on trade policy, on what they can manufacture and export. And there's such an uncertainty around the manufacturing corporate sector that I've never seen it before. And although they've given some, US has given some gap, July is some date, July 29th. And, we hope that we can sign the FTA with US as soon as possible. Hopefully on our terms or a little compromise both sides. And we expect to be the first country to sign with US. And this fall, we think we will be able to sign. That's what the expectation is. As we have already signed with UK. And it's a tremendous FTA with UK. I don't know if you are aware of it, but there are many products where they said they'll charge zero duty from India. Marine products, leather, pharma.
All of them have zero duty.
Have. And so there's massive opportunity in India to export to US. And even we have given in by getting legal services now. Whiskey, they have reduced. We have reduced duty on Scotch whiskey.
Yes.
So I think India UK is a good model, which also gives visas for very high professional people. And so, we should try and use that because India, European Union is still on the cards. India, US is still work in progress. But UK, India has managed to do a good job.
Yeah.
Win-win for both.
And as you're saying, I think this tariff with the US, one is, of course, we hope that it works out well. Secondly, I definitely think that if the Indian manufacturers play it right, they can still get a better competitive advantage compared to other countries. Because, all said and done, the math is in our favor. We have to work more efficiently, but I think we will still be better off.
I agree. I entirely agree. First of all, our bulk exports to the US are service exports.
Yes.
Where there is no tariff.
That's right.
It is only on manufactured goods that tariff is.
Yes.
And as you say, if we work out well, but we have to, on our side, we have a few things to do. We have to increase our productivity, improve our productivity. We have to reduce our logistic costs are high. We have to improve ease of doing business. And there are 3-4 things which we need to do. I think if we are able to do this, we will not be in such a bad position.
Yes.
You see, don't forget, 71% of our GDP comes from consumption, domestic consumption.
Yes.
Domestic consumption, both private and government.
That's right.
Public.
Yes.
The service exports are less cyclical. And also, we don't have a large exposure on commodity exports, which is very volatile.
That's right.
We are really in a good spot.
In fact, talking of commodity prices, actually the current macroeconomic situation, if at all, will help us in one way. That is the reduction in crude oil prices.
Yeah. It's a big favor.
That's right.
Apart from reduction, the reduction is due to 2 factors, I think. One is global slowdown.
Yes.
Demand for crude has come down. And the production more oil than what the global world can absorb.
Yes.
So prices are soft.
That's right.
And in that we are getting part of 30% of our crude comes from Russia at a discounted price.
That's right.
So we are in a good shape so far that is concerned also. Because India does well and crude prices are low.
Yes, exactly. So I think that way India is in a very good spot. Very good spot. Yes. And like you, I've also always been optimistic about India's potential. So, from here to becoming the $5 trillion economy, the $30 trillion economy, you think we are on a good path?
I think we are on the right track. We have become the 4th largest economy.
Yes.
In 2 years' time or 3 years' time, we'll become the 3rd largest. And we'll remain there because the gap between US, China and India will be huge.
Yes.
Similarly, if you look at the financial side, look at the capital markets. I think our market capitalization is around 6 trillion. We are the 4th largest market cap in the world. Japan is 7, China is 8. We are 6. US is in 50s. But I think with new IPOs and large number of IPOs that are coming, the construction of semiconductors, number of units, in 5 years' time, we will be number 2. Even in market
you think
capital.
So?
I'm quite... there are 30, 40 IPOs I know which are waiting to come. And once they come, the market cap of a country goes up.
Yeah.
And more IPOs happen. So not only GDP-wise, and the most positive thing for India, we have been growing at twice the global average.
That's right.
We have been growing for the last 2 years and the projection for 26 between 6.3, 6.5.
Yes.
The world is growing between 3 and 3.3. So twice the global growth. And Europe and China are growing in decimal points for the last 2 years. Decimal below 1%.
Yes.
And even if you see the first GDP growth rate of US, it's 0.3%. So US, where the recession is on the way, what has happened to US? US GDP growth rate is 0.3 in the first quarter. So I think we are in very good shape, but we are in good shape in a poor neighborhood.
But yes, we can't choose our neighbors.
I know.
Yes. So we have to make the best with the cards that we are dealt with in that
But
respect.
Kissinger said something very interesting about US. He said US has no permanent friends. US has no permanent enemies. US has only interests.
But you also spoke about the equity markets, market capitalization, and so heartening to hear that. Also, I think the positive part is that there's a lot of retail participation, more and more retail participation.
Absolutely.
Yes, and people are investing in SIPs and so on. The only thing is that when the small investors come in, sometimes they find it most difficult to gauge the market. So in very volatile markets, the smallest investor is probably left, kind of holding the cash.
That's true.
So what is the advice you would give to those small investors who are entering the equity market? What should their approach be in terms of dealing with the equity market?
I think the approach should be patience.
Okay.
Long term. And absolute patience. One of Warren Buffett's statement is that stock market is a device to transfer money from the impatient to the patient.
Okay. Yes.
Very well said.
That's right.
So I think in stock market, you can't see the papers every day and see the price. You have to make a good investment, which you think either advised by someone or what you have seen, and stick to it for some time. And don't look at it daily. See how the mutual fund industry has grown.
That's right.
Tremendous.
Yes.
And 64 unit trust started. After that, for how many decades there were no mutual funds.
That's right. And as we build our India, and take it towards those large numbers, I think one of the basic building blocks for an economy is the banking sector. I've always said the banking sector is like the heart. If the heart pumps the blood, all the limbs, everything get the blood supply. So talking of the basic building block, do you think the banks today are lending enough to the corporate sector?
Not. I'm worried. I'm concerned. And today we need the DFIs.
Yes.
Because project finance and long-term project finance is very difficult to get today. Probably State Bank is the only one who is willing to do.
But why do you think this is so? See, the banks, we've seen our our 4 decades of our career, and the banks and the financial institutions have funded projects. They have funded the corporate sector, and that's how they funded the growth of India. Yes. So why is it that today they are shying away?
Somehow, first of all, the retail deposit accretion is low. And people are saying that more money is going to the capital markets in SIPs. I think consumption is also high. People have now, the new generation not concerned about saving. They're confident about themselves and their future. So they don't save, they spend. So consumption is also taking away part of that. So banks deposit will not grow, then how will banks lend?
In fact, banks have this loan to deposit ratio. So how much are they lending and how much deposits they get? Now, their loans are growing at a faster rate than deposits. So how will the banks sustain this?
See, first of all, till 6 months ago, the market was so tight that banks were not lending. There was liquidity crisis. The new governor came and at least brought the CRR down.
Yes.
And he's also done open market operations on a regular basis to pump money, because we saw the GDP growth rate slowing down. And if banks don't lend, GDP won't grow.
Yes.
Banks have to lend for the economy to grow.
To grow and for
And
the
so
to build the economy.
I think it's the right time now for, as the governor has done, reduce CRR, to gradually bring down the SLR also and give more money to the banks, because overnight deposits are not going to increase. Banks feel it easier to lend retail. Retail lending has become a large part of a bank portfolio.
So that's the point I was making, that, okay, one thing is the deposit growth is probably slow, but whatever the banks are lending, they're lending to the retail sector.
Retail sector.
Feeling shy to lend to the corporate sector. That's not a great sign, isn't it?
I know, but some of it is bad experience in the past. Some of the public sector bankers are a little concerned that if the loan goes bad, they will be accused and they will get into a tight spot.
Absolutely.
So that independence is not there and they're worried about that. So there are a number of factors, but the best way is to increase liquidity. Our inflation numbers are down to very low levels, 3.3%.
And in fact, they may come down further.
If we don't give money in the system now. And the other issue is, I'm surprised private sector is not expanding, not spending capital. When the core sector business goes to 75% capacity utilization, 75, 80, companies start thinking of new projects, brownfield, greenfield, whatever. I don't see any plans of new cement plant, new steel plant, expanding existing capacity by 500,000 ton, 1 million ton, 2
That's
million.
brownfield, that's not greenfield.
So that happens.
Yes.
But for some reason, new capital expenditure, private capital expenditure is not happening.
So is this because they're not getting bank funding? Is this because they're not finding ease of setting it up, or is this because they're not confident?
It's a combination of factors. It is finance, ease, it is uncertainty. It's a combination of these. Where the investment is going is RRR, the movie, roads, renewables, and refineries. That's where investments are going.
Okay, and I'll add the fourth R where bank funding is going, which is retail.
Retail.
Yes. So consumer credit, of course, in India is still lower. Consumer credit to GDP is still lower compared to many other developed countries. But at the same time, I have this interesting theory. When I look back, for people who were born, say, in the 1960s, their first loan used to be when they were in their early 40s or mid 40s. They've worked for a few years, they've saved some money. Yeah. Then they want to put down payment, they want to take a housing loan so that they have a home when they retire. Now, the new generation, the people even born in the 90s, the moment they start working in their late 20s, they start with a credit card for sure.
Credit card, car, home loan.
Home loan, yes. So it moves in that direction. So the way the consumer credit is being consumed has shifted substantially. No harm in that fuels growth. But two questions, the young generation today, how should they look at financial planning, this financial discipline, EMI, credits? Should they borrow? Should they not borrow? How should they manage their finances?
I think for whatever purpose they need the money, they should ensure that only 25% of their income is used to repay a loan.
Only 25%.
Only 25%. Because you need the balance for your family, for your own upkeep, for maintenance, for taxes. So 25% is the maximum you can pay. Unless, of course, you're ultra net worth, high net worth, and you are earning crores of rupees, then it's a different thing. But I think 25% is a good number to give self-discipline to people, that 25%. And the concern that you're talking about on retail lending, this is the beginning, because penetration level, as you say, are so low.
Yes.
Consumer credit is 40%. China is 70%.
Yes. US also.
US is 70%.
Yeah.
Similarly, mortgage to GDP is tiny compared to Europe and US.
That's right.
Insurance penetration is 4% compared to global average of 7-8%.
Yes.
So we have still fair amount of money going into other sectors, saving sectors, rather than bank deposits. So this is a concern the RBI have to tackle. Because how are banks going to get money to lend for? The retail demand is there. Retail demand won't stop because as the affluence, as the aspirations go up, retail individuals are more entrepreneurial, more confident about themselves, so they'll borrow. And we'll reach global averages in the next decade or two. But the banks need money to do that.
That's right. Yes, yes. But this whole lending to the retail sector in such a big way, you don't think is a systemic risk for the banks?
Two areas worries me. One is microfinance. Microfinance, the arrears have gone up significantly, if you see. 15-18% NPA. You don't get a margin of that much. And the number is also staggering. It's what I read was about 60,000 crores NPA on a 3 lakh crore, 3.5 lakh crore book of all microfinance. It's a concern.
Because a lot of it is just, you lend to get the repayment and you lend to get the repayment.
And even banks are hurting giving unsecured loans. I've seen NBFCs and all who have started giving aggressively unsecured loans. There is a little issue in unsecured loans and microfinance.
Yeah. But because of all these, we've seen RBI kind of coming down heavily on these restrictions on lending, even with NBFCs and so on. You think that's justified, or you think, just to take care of some bad apples, we are kind of curtailing the growth?
I think sometimes we overreact because of one bad loan or one bad company that goes under. Suddenly, one mutual fund goes under, then new rules come up. One bank goes under, again, new tighter regulations come. And NBFC, RFS collapsed. Suddenly they brought 3 categories of NBFC and bank-like regulations for larger NBFC. So a little bit knee-jerk reaction, but I think we should be able to anticipate who's not doing well.
And have a focused approach.
See, like how the Yes Bank issue was handled.
Yes
Bank issue was handled like that. One could have handled a few other issues.
So, you said that for the individuals, say, target that about 25% goes into your loan servicing and not more. Similarly, what would you tell them about savings? Because, again, as you see, the proportion of household savings to GDP is going down, actually, which is okay. People also want to spend more and so on. But even in their own savings, people either invest in physical assets, homes and gold and silver, and much less in bank deposits. They also have equity and SIPs, as you said. How should they look at their mix of savings?
I think we have grown up taking life insurance policies. It's a savings product. But it had
People are now looking at it as an investment product. It's no longer a protection product.
Insurance companies, people have to work hard to sell.
Yes.
But because the tax relief is removed, and insurance is probably one of the things with the younger people don't care, but they should care. Because they build a family, uncertain world, people over-exercise. You've seen so many deaths, I see. Practically every second day, a 40, 50-year-old person.
Yes. Why 40, 50? Now you're hearing even in 30, 35. While exercising, suddenly.
While exercising, over-exercising. And accidents and over-exercising. So to protect your family, you need a life policy. But people are not buying life policies, Not to the extent I would like to see. Therefore, penetration levels are low. But that's a saving product. It was a tax and saving. But now tax advantage is gone. So mutual funds are still getting money. SIPs are coming from the lowest because the entry level is so small. Some 500 rupees or 1,000 rupees or something like that. So entry level is low. So a lot of people are putting money. But now, we assume that stock markets will keep going up, but it could go down.
That's right.
I think the new entrants have not seen a crash. Once they see a crash, they'll realize.
Yes.
We have seen crash. Pakistan war and all in the 90s, how it crashed, and these Harshad
the global
scandal,
economy,
global financial crisis.
Yes. So overall, but I think what you're saying for the current generation is that even in terms of your savings, diversify, think of even long-term, like insurance, of course, you buy a home, you invest in SIPs, you do all that. Make sure your loan servicing is not more than 25% of your income, and participate in equity markets, but patience there. Take a long-term view.
We can tell them, but what I see in the market is if they buy a property, they take a loan against that property
That's right.
and buy another property because they say the property price will double.
Yeah.
So, how do you curb the instinct of a youngster who wants to grow rich quick? Borrow and grow rich quick.
So, given this kind of scenario, how do you see the future for the banking sector? Because, as we said, people are not investing too much in deposits. The lending is more, of course, towards retail than corporates. But when you have lending, you also have competition from NBFCs.
Yeah.
Then, of course, there are these fintech companies. They are doing a part of what banking used to do, payments and so on and so forth. So, what's the future of banking?
No, I think the banks have to optimize their costs. Because see, the CASA ratio, which was high, is coming down. Of all
The
banks.
current account and savings account deposits.
Because people have become more educated. Why should I keep money in current account?
Yes.
I think the regulator and the banks have to sit together, and if the demand for loans is there, we should be able to fulfill the demand. If demand is not there, it's different. But today, for instance, new airports are coming up. Who's funding these airports?
Yes.
And now the new Bombay airport, irrespective of whoever is building it, will require 20-year funding minimum. 5 years to build and 5 years to break even, and then 10 years to 20-year money. No one is willing to give 20-year money. And no one is willing to give fixed rate money. So, we have a little mismatch, and it's a bit worrying because non-availability of long-term finance is a big concern.
That's right. Yeah. And to build India, we need that.
We
need that for sure. But therefore, talking of Reserve Bank, talking of central banks in general in various countries, priorities are this, that you fuel growth, at the same time you manage inflation and interest rates. Now, as I said, one is, of course, regulations towards, we have to have focused approach rather than trying to, curtail the whole sector for the sake of a few bad apples. But in terms of interest rates, again, interest rates, we all know, if we bring down interest rates, more people will buy homes and more corporates will invest. Where do you think we are in India as far as interest rates are concerned?
See, I think, everyone takes cue from the Federal Reserve. In this meeting, they held interest rate. 3 previous meetings also they held interest rates because of the uncertainty that is there. There's a need to reduce interest rates, but because of the uncertainty, they've held rates. Because lower interest rates spurs growth also. Affordability. Affordability is an issue in India. Inflation, again, the issue is, inflation is agriculture related or food related agriculture. We have to sort that problem out. And the logistic is the biggest problem.
Yes.
What the farmer gets is such a small amount of the revenue, and what the consumer pays is such a large.
And we lose so much on the way. The fruits, vegetables.
Wastage, logistics, destruction. And so from the farm to the plate, there's a massive loss.
That's right.
And neither the consumer is benefiting nor the farmer is benefiting.
Yes.
And that's why the inflation is there. Now we have enough food production, but logistics are not improving. Logistics have to improve. And the government tried. The agriculture bill was in favor of the farmers, which they did not understand. And they went on a morcha and a hunger strike in Delhi and all. They couldn't understand that the government's intention was to get them more money.
Money, yes. So we have to focus on, food processing, food transportation, all that, so that we avoid wastage.
The middlemen which are there who are making more money.
And the wastage has to come down.
Years ago, the government asked us, why don't you do rural housing? So we did a study, and it was a good study done on a reputed agency. This is some decades ago. Housing in rural areas was the 5th priority. Number 5 priority. The first priority is where to keep our produce. Believe it or not, where to keep our produce. Because it takes time for the food corporation lorries, the warehouse to get it out. We have no place in our homes, the huts. We have to keep it outside and it gets damaged by the time the delivery is picked up. So that was number one. But
the rats, the rodents, all those go into
that issue, and not availability of money, availability of fertilizers, home.
So there's so much improvement that just logistics. Can bring about. Yeah.
GST has improved logistics tremendously. You had trucks waiting, 100 trucks waiting on border between two states. We've seen it so many times when you travel from one state to the other. All that is gone because of GST. So there's been a massive improvement, but it's not enough. We need more.
Yeah.
On the agri side, we need more.
Yes. You spoke about the cut in CRR, the cash reserve ratio by RBI, how we are looking at interest rates. Yes, of course, they infused some liquidity. They even did that liquidity adjustment fund, LAF, what we call. But over these decades, both of us have seen so many RBI governors. Tell me any particular incident with any RBI governor, any interaction that is memorable?
Well, Bimal Jalan, who was an ICICI
That's right.
and a friend of mine. And so Bimal always used to tell me, come join a public sector as a CEO.
Okay.
And I resisted his move. And 2-3 times he called me that this bank is vacant, this bank you can take. I was sort of not ready to take on that challenge. Even he said, come and join RBI.
Acha, okay.
That also he did say, but I've never told this to anyone.
You thought it's the bureaucracy, or you thought you just needed to do much more in HDFC?
No, we were growing, and we had and I was having fun. I was enjoying myself, and we had phases where we started new ventures and life, asset management, non-life, private equity, so many things happening simultaneously. So I was quite happy and contented. So
let's talk about that journey of yours. You quit Chase Manhattan Bank, a job there, to set up HDFC. Of course, Mr. HD Parekh.
He persuaded me.
Yes, and he was an ICICI at that time. Yeah, and he persuaded you. But what gave you that conviction that yes, you should quit a good job and come and start this?
See, 2 things. One is when he asked me, I was transferred from Bombay.
Acha, okay.
They were putting me, it was mid-70s, 77 or so, 78. They were transferring me to Saudi Arabia.
Okay.
And because Americans would not work there, it was the first oil boom. And they had a Saudi-American Chase Saudi bank.
Okay.
And they said, we want you to go and work there. And I was reluctant to go to Saudi. So first of all, I was settled in Bombay. I didn't want to move. So that was one. And the second is that HD Parekh had no children. He looked at me as his son. And the way he put it to me as if helpless manner, that I said I can't say no to him.
You must have started in what, a small office and then built the
Raman house, 1 floor. And then we started buying from Raman and them people.
Acha, okay.
As they were the owners.
That's
and
right.
They were always in financial trouble.
So you floor by floor, floor by floor you were buying. Yes. And then came the liberalization for the banking sector, so the HDFC Bank. And then how was the journey, the insurance?
So this one small ad came in the paper that Reserve Bank is willing to give licenses to set up new private sector banks. I saw that small. And I got excited. I came to the office. I talked to some of my colleagues. Then we went to our board. Our board first said, no. What do you people know of banking? And why do you want to start a bank? And then we said, allow us to prepare a feasibility report. And we prepared a report and we showed it to us, the board, and we sent it to RBI saying that we are never going to get permission. And we were the first to get permission. And then the bank had no choice. But then again, they I wanted to take a larger percent, but they refused.
Yes.
They said that our capital is so small, how can you put more capital in a new venture?
But talking about this, the same thing, Mr. Vagul, he was the chairman of
Yeah.
ICICI at that time. So he called me. He said, to his office, he said that, look, this is what RBI is allowing, and we must set up a bank.
Yeah.
And you are going to be employee number 1 to set it up. And he said, let me also tell you that in the last 50 years, no one in India has set up a bank. Only banks have set up branches. But nobody set up a bank. So this is going to be our new foray. But those were exciting times. And then, of course, HDFC, like other groups, also went into insurance and mutual funds. So you were always, as you said, on the go. And then the HDFC Bank and the HDFC merger. So that was in the offing for very long, and I think something so close to your heart. Why did it take so long to get done?
See, it took so long to convince the bank people. The bank people were not convinced. I remember you talking to me once.
That's right.
Remember it very clearly. It's never been talked in public, but I'm willing to share it now. That ICICI started HDFC, why don't you come back home? That was your offer before we merged with the bank. But I thought it won't be fair. It won't be proper with our name and the bank and all. So, see, as RBI pushed us towards, when they had large, they classified NBFCs into large. Now, large was 50,000 above.
That's right.
We were already 5 lakh. 50,000 above was the limit for large NBFCs. We were 5 lakhs. And they felt that they supported us and they pushed us into it to some extent. And they helped us. They helped us in the sense navigate. They didn't give any concessions. No concession, no relief, no time, nothing. But they helped us to go through the process and get the approvals.
So when it actually happened, when the day you saw this culminating, what was the feeling?
Excitement. It was kept a secret. No one knew about it. When it hit the press in the morning, that's the time everyone found out. And the government was aware because RBI was in touch with them. And we kept it so close, and with lawyers and the due diligence, accountants, all hovering around the offices. Still, it was not detected.
No, very, very well kept secret. But what was the feeling in your heart?
It was a mixed feeling. It was a sad day and a happy day. So it was a mixed feeling.
It's
but
like
it's good for
the child has grown.
Yeah, and it's good for the institution. It's good for the country to have large banks. Look at how large Chinese banks are.
Yeah.
We have to be bigger, larger in India. And we have to grow by acquiring new banks to become larger and stronger.
Yes. But that way now there are a few large private sector banks which are meaningful. But yes, for the country to grow,
we need larger banks who can take larger risks.
Absolutely.
We had some, cultures were different. We had some teething trouble in the beginning, but now it is settled down. There will be issues.
But continuing to talk about housing finance, HDFC was known, and Mr. Deepak Parekh was known to always support the growth of the developers. So tell me, how were you looking at the risk when a developer came and met you, a real estate developer? What were you looking for when you were deciding whether to fund?
Developer loan was a small portion. We were really in retail lending, and 80% of our loans were retail, and only 15-20% were developer loans. And the main reason of doing developer loans is we needed to increase supply of housing. If supply doesn't increase, how will people buy? Prices will go up if there's shortage of housing, and that's what's happening. That's what happened, and that's the reason we looked at
Developers.
supporting the developers and funding the developers. And we had some wins. We had some people, we worked for 40 years. We had no problem. Quite a few of them. 30 years, so there are so many we worked with, no problem.
But see, the issue also with developers is that banks are not allowed to fund acquisition of land. Yes. So how do they grow? They also have to find different ways of funding.
Land is the biggest asset in a city. Like in big cities, 70% is cost of land.
Yes.
And if you can't fund land, that fallacy should go. Banks should be allowed to fund.
That's right. Yeah.
Now, what we have done in HDFC Capital, which is 90% held by the bank now, 10% by Abu Dhabi Investment Authority, where we are only funding land.
Okay.
Land to developers, and we get 15, 16%, 18%. And ADIA has given us over $3 billion.
Yeah.
And now they have said, even when you divest, don't pay it back, reinvest.
Okay.
And these are short-term loans because banks come in when the construction permission are received.
Yes.
Commencement certificate comes, then builders go to banks and reduce the cost of borrowing.
Yeah.
So we are in that niche and we are doing well in that niche.
Yes. Affordable housing. Again, targets are quite ambitious. We've made progress, but maybe not so close, not getting close to the targets. What do you think we need to do more?
We have to increase supply. There is enough demand. But builders find it easy to build larger flats and sell rather than build 400 square feet flats and sell. There's more trouble, more cost also. More cost to build a small home. So financially, they are not motivated to build small homes. Because the cost of construction goes up because they are smaller rooms and you have, then sell 400, 4,000, 3,000 square feet, 2,000 square feet.
With just bare four walls.
But then to make small and do more sales, a single sale you get. So most developers are not doing affordable. We have to incentivize them.
How can we do that?
We have to incentivize. In the good old days, when shipping industry, there was this shipping HDFC, Shipping Development Finance Corporation. When any Indian bought a foreign ship, he had to order one Indian ship.
Yes.
There was a rule.
Yes, there was.
Otherwise, there was no orders to all our shipyards across the coast of India. We have 5 or 6 shipyards. From Mazgaon Docks to Garden Reach and so many. So if you order overseas, you have to order one
here. Yes.
Something like that if you do a large housing project, you must
have to do one affordable house.
Some incentive for developers to do.
So that we can actually increase the ownership of homes in the country.
People are willing to buy 20 lakh, 40 lakh homes.
Yes.
But there's no availability.
No supply. We spoke about the equity markets, the banking sector and so on. Insurance sector, as you said, penetration is just 4% of GDP, which means there's a huge potential. But it's remained as 4% for a long time. Why is it not doing? What's the opportunities, the challenges for the insurance sector?
No, I think it's the least understood product. And mis-selling has spoiled, mis-selling by banks, mis-selling because the front-end commission is massive. And, I get letters from customers saying I'm 75 years old and I bought a 30-year policy has been given to me. That kind of crazy thing, just to get that upfront premium and bonus to the man who sells it, the distributor. So, again, I would say that some tax benefit in life insurance must come because it's safety, family's future, family's safety.
Yes.
Some incentive must be there. Otherwise, everyone is enthused with capital market. Go to the market, put in mutual funds. And even unit-linked insurance has slowed down for some reason. Because investors feel mutual fund is a better place to invest. Massive TV advertisement you see, massive on mutual funds.
Yeah. But also, insurance companies have a large corpus of funds. Yeah. So, world over, insurance companies do fund corporate sector. in India, the regulations are very tight.
Very
They don't
tight.
allow them to
You
fund
see,
corporate sector.
India, the point is the preemption level is so high.
Yes.
First 25% you have to put in government securities. Next 25% you have to put in state securities. Next 75% in infrastructure. So, the balance available for investment in equity or private debt is very low. I was hoping that the rules of investment change. The
Yes.
rules of life insurance investments have not changed.
So as we move on our roadmap to make this 5 trillion economy and then $30 trillion economy, what are the 3 non-negotiables you think India should put in place?
Ease of doing business,
Okay.
which includes ease of buying land and everything. Finance availability.
Yes.
Availability of funds.
Finance.
Because no one will think of a large project unless funds are available. And third is some incentives that we had in the past, capital allowance, accelerated depreciation. I know it is all being taken away and we have a simple tax system, the no freebies. But how do you encourage in this uncertain world entrepreneurs to put their own money and take a risk by borrowing money which they have to pay back if they're not sure what the tariff will be tomorrow or whether they'll be able to sell, whether they'll be able to buy raw materials.
So you think people are living under too much of scare about what will happen if we take a decision and the decision goes wrong?
I think it's
including the banks.
Yeah, I think it's the aftermath of what happened in the last decades, where a lot of companies went under and a lot of loans were written off, and a lot of flack the bankers got, and so there is a transition now, but and fear that if a loan goes bad, what will happen?
So overall, financing has to be made available.
Financing has to be made available.
Which can be a mix of many things. You increase the systemic liquidity.
Yeah, you increase the liquidity. You reduce insurance company can. See, the government needs so much fund.
Yes.
The state and center, so they preempt everything and they keep private sector out.
I think increase liquidity, encourage the building of India and building of projects.
But you see, we have got today political stability, economic stability, financial stability, fiscal discipline, economic stability. So the factors to set up
and the demographic
factory,
dividend.
Yeah, and the factors to set up industry for foreigners and everything is, because of all this and huge consumer demand.
Yes.
So even this Apple not being able to sell to America, I don't think it's a major concern because other parts of the world we can export to, and Indian consumption is so high.
Not only that, whatever Apple does in India is mainly assembly.
Yeah.
That's a small part of their overall cost of the phone. So, and with tariffs going up, they're going up in other countries also where they get it assembled. So still, India has, the math still works for India. Yes, I think we should use this as a reminder to say as much efficiency that we can get. We should try and get that. But many exporters are also saying that their export inquiries have not come down because of tariffs. We still have
5 साल लगेगा before they
set up and then to set up efficiently and have those kind of cost structures, time lagega also. On that positive note, talking a little bit about Mr. Deepak Parekh. You've always been so calm, so kind of peaceful when it comes, whether it's the big economic crisis that we've seen, whether it's the big decisions that you have to make. So where does this calmness come from?
I was not calm when I was growing up.
No, you were not.
Not at all. The early days of HDFC and all, I was not calm. I was getting irritated, shouting to people. You learn over time.
Okay. Okay.
Maturity comes as you age.
So if you were not calm when you were young, what and you said about HDFC, but what does your family have to say about it?
Family saw very little of me in those days.
So that's the point, when we are in the thick of our career, we are almost giving our life to work. So it's struggling to find that time for family. So did you see the same thing happening?
Same thing, because when we opened branches, we opened so many branches, they always want the CEO to come there.
That's right.
And you have to go there and meet everyone,
Yes.
from the manager to the lowest level, and talk to them,
Yes.
motivate them, spend time with them. So you have to travel all over India. Wherever we opened branches, I used to go regularly for 15, 20 years.
Initially, though, in fact, when ATMs were new in India, I remember that ATM inauguration also the CEO had to go, because it was a big thing, setting up an ATM. So, yes. So, but now you get to spend more time with your
But now
family.
they don't want to spend time with us. They have got their own kids, family, their own friends.
Yes.
So we don't see them. We see them once a week on Sundays. We have lunch together.
Okay. So the ones who are in India. Yeah. But you have what? 5 lovely grandchildren.
5 granddaughters.
Daughters. Yes. So
from 16 to 6.
Wow. So you get to see them once a week for sure.
Yeah.
But you don't play Sudoku with them or bridge with them or take them for cricket?
I take them. I take them out. I take them out for eating.
Okay.
And I play chess with them sometimes.
Okay.
But they want to be amongst themselves.
That's right.
They don't want to come near you.
That's right.
They want to give you a hug and go away.
I think the grandparents have to cherish each of that hug. Each moment and enjoy each moment. That's right. Yes. Mr. Parekh, you are an institution by yourself. Someone who's built, who's nurtured and never faltered. So we want to know, how do you assess risk? How should an individual in general look at risk? Assess risk, manage risk. What is Mr. Parekh's,
No, I have gone wrong in a few cases. I have definitely gone in a few cases where I thought I would never be wrong. But the most difficult cases where I thought that we will not recover our money, we received the money. So it's a combination. I don't want to give names. But basically it's gut, it's intuition. You can prepare a 50-page docket of his past and the numbers and future scenarios and all. But it's instinct. When you see a person, the feeling you have, gut instinct. And because when you give money to developers, he's nothing. He does each project in a separate company. So there's no big balance sheet to study.
Right. Yes.
Each company is a separate, each project is a separate company. So what do? You have to just rely on his expertise and his intention to pay you back. That you gauge.
Yes. I always believe that a bad project with a good promoter will still be good. But a good project with a bad promoter will never be good.
Never work.
Yes. You are, of course, also very fond of cricket. I've seen you at the cricket.
Passion
for cricket. Excited about.
I go to IPL matches in Bombay.
That's right. Tell me, if you were to compare your leadership style, in the cricketing world, would you call yourself like a cool-headed captain like Dhoni, or a risk-taking all-rounder like Hardik Pandya, or somebody else?
No. More like Dhoni, because teamwork, and get to know your staff, spend time with them, be with them, and sometimes be with their families, the senior people, and that is management, carrying the large team together.
Absolutely.
And carrying people together, you have to be polite, you have to be humble, there should be no hubris, there should, these are qualities which Dhoni has.
Yes.
You can't be aggressive.
Every person's life is unscripted. Unexpected moments come, you don't expect them, but they change you in a manner that you never thought, would happen. So what was that one unscripted moment in your life which kind of changed your path?
I remember the first loan we dispersed in HDFC. And we put that man's photograph on the first balance sheet of HDFC.
Okay.
We were so thrilled. It was a 40,000 loan in Thane. And to see the company grow to billions of dollars.
That's right.
and to see the subsidiaries grow, the associates grow, is very satisfying.
Absolutely.
And growing profitably.
That's right.
Rewarding shareholders
Yes.
whose company you're working for.
Yes.
So you have to behave as if it's your company, although you may not have 0.1%. But you
Ownership.
have to behave, act, perform as if you're owning it.
Yes.
Whether it's cost or recruitment or growth or risk or anything. That ownership is yours. You have to take that responsibility.
Yes, yes. I think, that's also said that professionals today have to behave like owners.
Yeah.
In the similar manner that owners today have to behave like professionals. So that's when your companies grow, whether you are growing it as a professional or as an owner. So, Mr. Parekh, now we come to the last part of my episode, which is the fun part. You to give me impromptu answers to some of these questions. Okay. So tell me.
Single word answers or?
Yeah, as short
Small
as they can
as
be.
short
As short, yeah. They need not be a single word, but short answers. And what comes first to your mind? So, bridge, cricket, or Sudoku?
Cricket.
Cricket. And you also play cricket?
No,
Used to.
days.
Used to. Tea or coffee during long meetings?
Coffee.
Coffee? And it's always got to be hot, or you are hot coffee? Okay. Your go-to comfort food. Once you go home after a full day's work, what would you want to just eat?
Home food.
Home food.
Home food.
Dal chawal, khichdi.
Because we go out so often.
Yeah.
So you want to eat home food.
So you're fond of the Gujarati sweet dal?
Simple vegetarian food.
Okay. One song that always lifts your mood.
मेरा जूता है जापानी.
फिर भी दिल है हिंदुस्तानी.
दिल है हिंदुस्तानी.
Yeah. You're fond of Bollywood basically.
No, I when we were growing up, we were listening to Radio Ceylon every day, and you remember the old songs, but I don't watch.
And the Binaka Geet Mala.
Binaka Geet Mala and all. So I don't know and understand today's movies. I don't go to. But I still like old songs.
Okay. You'd be more rising early or burning the midnight oil?
Sleeping late.
Sleeping late. Including in the end doing your Sudoku.
Yeah.
Yes.
Midnight. Not before midnight.
Okay. A book that shaped your thinking.
I don't read books.
Acha.
I read annual reports of Warren Buffett. That gives you a lot of management lessons.
So if not finance, what profession would you have?
Finance department of a multinational or an Indian company.
But something related to finance
Commerce
and numbers.
and finance.
Commerce and finance. What's the one app on the phone that you use the most?
Score. Cricket score.
Cricket score.
Sudoku and cricket score.
Okay. But Sudoku on the phone or on the laptop, there's one thing that I noticed. When you take the book and do it, if you make a mistake, you will realize it only much later. Whereas on the phone, and they tell you immediately. So
but the trick is not to make the mistake.
No, yeah, that's true. That's true.
And then they tell you are faster than how many?
How many? Yes. And your score and all that. It's very
I always want to see you're faster, and I get 98, 99%.
Oh, okay. What's the best advice you've ever received?
Be humble and kind.
And the last one. If you were to pick one cricketer today for a corporate turnaround.
For a corporate
turnaround, who would that be?
Kohli. Without any doubt.
Why so?
He's a thinker. Strategist. Thinking, passion,
that's right.
Commitment.
Well, on that note, Mr. Parekh, it was a pleasure speaking to you. What you've conveyed is that leadership is not about noise. It's about consistency, it's about courage, it's about quietly working and vision backed with execution. So it was a pleasure, as always, talking to you.
Thank you, Chanda. Nice seeing you again.
Thank you so much.
We know each other for 40 years.
40 years, yes, absolutely.